Nvidia usually steals the spotlight, but the fastest growing AI hardware stock right now isn't a GPU powerhouse. It's actually a company focused on CPUs, and it just crashed on a Robinhood's list of most popular stocks. That's a big shift, especially since the whole AI industry has been laser-focused on GPUs for years. If you're a developer, a startup founder, or an ML engineer, you know firsthand how GPU bottlenecks play out. They don't just feel abstract. They control how fast you can build, how much you pay for cloud, and even whether your systems stay up. But now this company is flipping the script. Their CPUs are purpose-built for machine learning. Not all AI actually needs a GPU. For things like transformer inference, edge deployments, and basically any workload that isn't massive model training, AI-tuned CPUs can run just as well, or sometimes even better. Here's what most people miss. This new player's chips claim to deliver 2 times the efficiency of standard server CPUs. You get throughput on par with entry-level GPUs, but without the headaches of scarce supply or wild price swings. Let's look at the numbers. In just 1 week, their trading volume jumped 300%. The market cap blew past $20 billion. And Robinhood traders? They're jumping in alongside Nvidia, Tesla, and Palantir. But this isn't a meme stock story. AWS and Google are both rumored to be testing the chips for their cloud services. Here's why. These CPUs use a custom instruction set specifically for matrix math, which is at the heart of transformers and deep learning. Where Intel Xeon CPUs do a bit of everything, these chips come with built-in accelerators for quantized models, slashing the time it takes to generate tokens. In real benchmarks, a BERT inference run showed nearly double the throughput, with 40% less power compared to Xeon scalable chips. If you're building machine learning pipelines, this is your signal to reconsider your architecture. Too many cloud teams waste time fighting for GPU quotas, only to settle for CPU setups that slow everything down. With this new architecture, you skip all that. Memory bandwidth is tuned for token streaming, so you're not fighting I/O bottlenecks during language model runs. And if you need to deploy variable batch sizes or want real-time inference on the edge, these CPUs scale out horizontally, even when GPUs are out of stock or twice as expensive. It's a true technical shift, not just a financial trend. So who wins? Cloud providers, ML startups, and teams working outside the mega-scale GPU world. You'll see platforms like EC2 and GCP quickly add these CPUs, and open source tools will update to support the new chip instructions. Losers? Legacy CPU vendors who missed the boat on matrix math, and anyone still thinking GPU equals AI. Over the next 6 to 12 months, expect a clear split. Massive model training stays on GPUs, but inference, recommender systems, edge AI, and anything cost-sensitive will move to these CPUs. Bottom line, this trend's flying under the radar, and it's underrated. Wall Street may chase big brands, but the technical advantage here is real. Cloud bills drop as much as 40%, and your projects ship more reliably. If you're building with multimodal or unpredictable workloads, skipping the GPU hype for these CPUs could give you a true edge. The big question, will developers adapt fast enough to drive these chips to scale? Or will inertia keep everyone stuck on old architectures? So what about you? Would you move your inference workloads to AI CPUs for that 40% cost cut, or stick with GPUs across the board? Share your thoughts in the comments, and make sure to subscribe for hands-on,